When it comes to real estate investing, you really have two ways to go. You could either choose to be an active owner-operator, purchase your own single-family home, fix and flip. The other option is more of a passive type of an investment. I personally got started as an active owner in real estate. That's where I cut my teeth as an individual investor. I got to a point in my life where it no longer made sense. I had an active day job that I was doing very well at, and I had 4 children, and quite frankly, I had no additional time to spend dealing with tenants. So instead, I pivoted to a passive real estate investment strategy, and passive investing truly is just what it is. Once an investor makes a decision to partner with us on that investment, their job is really to be a passenger on an airplane ride. We, the sponsor, are in the cockpit driving the plane. Our job is to get you from the time where we're acquiring that property all the way through the entire implementing the business plan and exiting on the investment. Multifamily, if you think about it, it's basically like single family. The only difference is there's a lot more doors involved. So most of the multifamily investment opportunities that we source are going to be anywhere from 100 to 500 units in size. These are communities with multiple buildings, hundreds of tenants. When you think about our value add multifamily investment strategy, it's very similar to the single family fix and flip strategy. The difference being you're not actively involved in swinging hammers on weekends and dealing with tenants, trash, toilets, and termites. We're really looking to flip an entire apartment community. So it's not just one door, it's rather hundreds of doors that make up the overall execution of the business plan. Value add means we're not just buying and holding the property, we're strategically improving it to increase its value and income potential. This can include renovating outdated units, upgrading amenities like pools, gyms, or laundry rooms, improving landscaping or curb appeal, or streamlining operations and management. So if our business model and our underwriting suggests that by forcing NOI growth by renovating a unit and increasing that unit price to $100 or $150 per month, that increase on a per unit basis multiplied over 300 units at a projected exit cap rate of, say, anywhere from 4.5% to 5.5% is what gives us confidence that there is going to be a significant amount of profit left over when we've achieved our business plan and when we've gone full cycle with that investment. So how does the investor make money? There's really a couple of different ways. One is on the cash flow side. So you actually distribute cash back to our investors. That is called a distribution. Those distributions typically start out lower in year one because we're in the process of renovating units and forcing NOI growth. The more cash flow that comes in future years after we've renovated those units and achieved a higher increase in those rental unit costs for the residents, we have more cash to distribute. Second to that, there's something called a preferred rate of return. In most deals, that preferred rate of return is going to be anywhere from maybe 7 to 8%. What that effectively means is that our investors actually receive the first 100% of all cash flow distributions up until the point in which they've achieved that full 7 or 8% preferred annualized cumulative return before we start to split profits with them. As far as the profit goes, there's something called a profit split that occurs when the investment goes full cycle. And our investors as a whole receive a much larger portion of that profit than we, the sponsors, would. And in most cases, that split is anywhere from 80-20 to 70-30, depending upon the size of the investment that the investor made into the deal. One of the reasons why most investors get started in real estate investing is not because of the tax benefits. But truth be told, it's why they can't get out once they get started. And the reason for that is because we perform what's called a cost segregation study on every individual investment offering that we make available to our investors. What that cost segregation study effectively allows us to do is accelerate the depreciation loss activity to our investors that partnered with us on the investment. Those depreciation benefits allow the investor to negate the capital gains taxes that they would otherwise have to pay on their passive income gains. Rise48 is a syndication firm. So what is investing through syndication? It's just group investing. When we're looking to acquire a property and we're going to leverage 65% debt on that acquisition, then we're going to raise the remaining 35% needed, that's called equity, from our passive limited partner investor communities. For us as individual investors, we may not be capable of making $500,000 or $1 million investments, but maybe we're capable of making a $50,000 investment, and it allows for us to achieve things like diversification, cash flow, appreciation, and tax benefits. So who is this type of investing strategy not for? This type of strategy is not for someone that wants to have control, not someone that wants to be actively involved in the day-to-day management of the business plan itself. If that's this type of strategy that you're looking for, you maybe choose a more entrepreneurial type of route. So for example, maybe you become a wholesaler or a fix and flipper. There's a number of different strategies that you as an investor can deploy if in fact you want to be an active owner operator in your own real estate investing strategy. So who is this type of investing strategy for? This type of investing strategy is for that individual that is a busy professional. They're generally a higher income wage earner, and they don't have the time to be able to actively manage a real estate portfolio because they just simply lack the bandwidth in their lives. Another big reason why someone would choose to invest passively is to diversify outside of Wall Street and into Main Street. And so what we're really doing is we're trying to provide investors with that opportunity to invest outside of Wall Street into Main Street, but not actually have to spend the time actively managing the day-to-day execution of the business plan itself. I really appreciate you joining us today. We look forward to connecting with you further. If you'd like to reach out and learn more information about investing with Rise48 Equity, please do head over to our website at rise48equity.com. If you want to reach out to me directly, please reach out at jeremy@rise48equity.com.